Welcome to the Pair Trade Finder Pro Trade of the Month for July 2018. The trade we're going to be looking at today is Medtronic versus Zimmer Biomet, MDT, ZBH. These are both traded on the New York Stock Exchange. Zimmer Biomet is a Dublin-based company and trades with an ADR. So the entry signal we received was on May 14th to sell short MDT at 86.18 a share and to buy long Zimmer at ZBH at 115.20 a share. This is done at 10,000 per leg. So the first thing we do when we get an entry signal like that is take a look at the profiles of the companies. Now we've done this when use the top 30. We've already looked for fundamental correlation between the companies, but it's quite interesting to do that for you now so that you see some of the things we looked for. So the first company, if we go to its profile, is Medtronic. And Medtronic develops, manufactures, distributes, and sells device-based medical therapies. Okay, so all of the things that people use as they need operations and get older, stents, surgical valve replacements, and the like. Zimmer Biomet, if we look at it, together with its subsidiaries, designs, manufactures, and markets musculoskeletal healthcare products and solutions across the world. So it does essentially the same thing. And one is based in the United States, one is based in Dublin, but they both trade on the New York Stock Exchange. Let's go quickly to the next thing we would do is look at the fundamental statistics of the two companies. And there's a few key ratios we'll look at here, just to see that there's a decent fit. And I think you're going to like this trade because this is it's like a textbook pairs trade of what we look for. So Zimmer Biomet, we've got an enterprise value of 34 billion, a forward PE of 16. Medtronic, we've got an enterprise value of 133. It's about 4 times the size. However, they're both mega caps, so we think that that's not going to be such a big issue. And it's also got a forward PE of 16, so they have the exact same forward PE. We look at price to sales on Zimmer. Zimmer's at 3 price to sales and 2 price to book. Medtronic's at 4 price to sales, but 2.5 price to book. Very similar gross valuation ratios. Then if we look at EV to revenue and EV to EBITDA, we're at 4 and 12.6 on Zimmer, and we're at 4.4 and 14.1 on Medtronic. That says the market is valuing the cash flows from these two businesses in a substantially similar way. One other thing we definitely look at as we do a very brief fundamental statistics review would be cash and total debt to equity. Here we have a 78.9, call it 79 debt to equity ratio, 481 million of cash on the books. Medtronic is sitting here with 11 billion of cash on the books and a 50 debt to equity ratio, so broadly similar leverage ratios as well. So that would tick our boxes, and we would say no problem on the fundamentals. Now, next thing we would do is go straight to the backtest results, see what kind of pair we're looking at, and you can see that over the last 3 years there were 12 trades. The average correlation is over 60%. Co-integration is 0.99, which is phenomenal. The compound annual growth rate of the pair was 16.4 with a max drawdown of 9.87. So this is textbook top 30 pair, hits all of our criteria. Here you can see the equity curve, bottom left to top right, fairly smooth. Here you can see the ratio back and forth, back and forth, back and forth over a non-trending ratio line. So that looks really good to us as well. We can see that the average net profit per trade was about 481. Percentage of winning trades over 3 years was 92%. And one other statistic we like to look at is average days in trade. And that's 23 days average days in trade. So when we look at this, we say, hey, everything here looks great. Let's jump to the next thing we would look at is just to see over the last year the relative performance. And here you can see blue is ZBH, green is MDT. You can see that there's the relative performance since beginning of August 2017. So the diverging, reconverging, diverging, reconversion, diverging, reconverging, diverging, reconverging, diverging, and reconverging. So we're seeing that co-integration at play. It looks good to us. Doesn't seem like there's any major breakout or anything. So again, a tick on that box. Now, as we always say in every one of our trade alerts, check news. So you've got this trade alert. You've looked at these things briefly. What caused it? Is there a major valuation affecting news release before that May 15th signal was generated? And if we go to, this is Medtronic, here's May 15th, there was an announcement, was news analysis shows Medtronic cardiac resynchronization therapy featured associated with improved patient survival. Well, that's a small item, doubtful that it pushed the stock enough to generate a trading signal. The last thing that we see here that could have been value affecting was on May 10th, and that was the financial results for the fourth quarter. That said, the markets had a full 5 days to digest that. I'm not sure if there's a weekend in here, but even so, with a mega cap company like this, these earnings releases are generally speaking traded away within a day or two. So that wouldn't bother us either. We go over to Zimmer Biomet, and very quickly we look at, so May 15th was a signal. Before May 15th, we don't see anything here. The last value affecting was April 26th when they had first quarter results. So doesn't seem to be a news related trade based on fundamental value shift. Rather, it seems to be liquidity generated, which is what we want to see. So once that happens, we then want to look and see if we're clear to trade this from an earnings and a dividends date point of view. And I guess the easiest way to do that is we can, if we go to profile for Medtronic, and May 15th, let me just see. We have ex-dividend date of July 5th and dividend paid on July 25th, and the signal was on May 15th. So that gives us enough time if we have an average 23 days in trade to not worry about the dividend. And if we go to Zimmer Biomet, dividend date of July 31st, ex-dividend June 28th, signal was May 15th. So we have enough time between the dividends. We can also see here that results were announced April 26th. The next one won't be until May, June, July 26th. So we're clear on earnings date there, and on Medtronic, February 20th, so March, April, May. We saw that the results were actually announced before this. So if you see, let's just go back to Medtronic. Medtronic announced its financial results on May 10th. So we're clear on earnings, we're clear on dividends, which is great. So then we go to the pair chart review. Let's see what we like or don't like about this signal. So the signal we're looking at is this one. Okay, here was the entry at 2, and here was the exit at the close of this day at minus 0.96. So what do we look at on these charts? First, we want to look at the ratio. Is it trending? No, it's very flat. You could argue it's starting to trend a bit here, but still very gently, if anything. So we say yes, it's flat. Is there a ratio breakout? This is the signal here. It did break out above this resistance line, but that was later, after you would have taken the trade. At the time of the signal, no, there was no breakout, so check there. RSI, here's the entry signal. Is it at an extreme? And the answer is no, it's not an extreme, it's at about 60. So one might argue that you might want to wait a day or two before getting in to see whether this goes further. If that's the way you trade. If it isn't the way you trade, then you would have just gone in if you like the signal. Either way, 60 is not an extreme. Do we see any divergence? We've got higher high. Well, this isn't a breakout, so I'm not seeing. No, I'm not seeing any divergence here. So it would be nice to see that. We don't have to see it, but if you see it, then it tends to help pick a turnaround for these reversions to means. Then let's also look at the correlation. So the signal was here, and we can see that the correlation had broken down and had fully recovered. It was up to over 80%. So that would say to us that over the last month or so, it had been well correlated. That's also a clear to get into the trade. And based on what I see here, there's nothing that would say to me that I shouldn't take this trade. It looks like a good trade. So the last thing I would look at is to see position sizing. And if I look at volatility, volatility has been for almost a year below 1.8, well, somewhere between 1.4 and 1.8. That's to us a very typical volatility number. That would suggest a full position size. and so we would take the trade with a full position size. And the results, had you done so, were that it took a little longer than it usually does. It took 2.5 months, but the exit was just a few days ago on the 27th of July, and your short lost a little bit of money. We shorted at 86.18 and had to buy back at 88.66, but the long made us lots of money. So 115.20 we went in at, and we sold at 126.20, and the net result was a gross profit of $555.72, which is a 5.5% return on the nominal egg value and about a 16.5% return on CFD margin employed, and that was over a 2.5-month period. So that's the trade of the month for July 2018, Medtronic, Zimmer Biomet, and happy trading.